We're here with Dave Lundgren from Wellington Asset Management. And Dave is a longtime friend of mine and a heck of a snowboarder as well. But let's get down to the nitty gritty. Dave, over the years, 40 years for the MTA here, how have you seen things change? Not necessarily from a technology standpoint, but from process and the way that you think about the markets. Was there a progression? Do you think it's been the markets that's forced you to change?
I actually believe that nothing's changed. I actually think you can look back in history all the way back to as far as the data will allow, and you can find trends that look just like they look today. And so I think we have this tendency to want to try to understand trends more than we already do, and I think we understand them enough. And you can look at commodities all the way back to the 1800s, 1700s, and those trends you could change the data at the bottom, and it's the same. Mm-hmm. And so I can understand why we would want to sort of anticipate that things would change, especially with the technological revolution we're going through and all the charting software and things like that. But I really don't think anything's changed.
Do you rely more on screening now, or do you still use the old-fashioned process of going through hand by hand and looking visually at the charts?
So we do both. What we do, because the universe that we cover is global, and so it's upwards of 5,000 stocks. And so what we do is we first screen, and then and you'll take 5,000 stocks down to 500, and then we'll go through and visually look at the charts that way. Mm-hmm. So we definitely use the technology, but at the end of the day, in terms of how has it changed how we act at the point of purchase or sale, it hasn't really changed too much.
And you are a self-described trend follower,
yeah.
Correct?
Yes.
When do you find that there are points, or are there any consistent points in the cycle that you find that you tend to back away from trend, or do you pretty much come hell or high water stay with trend regardless?
Yeah,
of the environment?
I would say come hell or high water, I stay with trend. And I think that the analogy that I try to use is that we have this temptation to change horses midstream when our process is in a drawdown. Mm-hmm. And I think that the best strategies actually are not designed to avoid a drawdown. The best ones are designed to help you navigate them so that you can stay at the table and lose just a little. And if you can't be in this game and lose money, then you're not going to make money. And I think that the biggest risk is that as our process is going through a drawdown, we then become fundamentalists. So we become valuation sensitive. And I just think the idea that you would be abandoning trend following when you're in a drawdown is basically a forecast. Mm-hmm. And we clearly don't. We make no effort whatsoever we identify trend, we identify changes in trend, but we make no effort to forecast how long it's going to last. Mm-hmm. And I think just managing risk. And the charts that I showed earlier, they show that this style over long periods of time, if you stick with it, is where you should be predominantly invested.
Let's talk about those charts a little bit. And I don't know if they're up on the website or not, but very compelling presentation between value and growth, and obviously momentum. How do you define momentum?
So the work that I presented was not original to me. So it was offered up first by Dr. French. And the folks at AQR, and their data and their studies are available on their websites. And I highly recommend anybody that's interested in this form of analysis that they go check that out. So I believe on Kenneth French's definition, it was any stocks that have been working over the last 12 months.
Okay.
Simple momentum.
Relative performance?
Relative performance.
Okay. Very interesting. And I thought another interesting observation was the length of time after a growth period where value starts to come back into vogue, and frankly the very small points in time over the last 80 years or so that that growth actually was a dominant force, but momentum was fairly persistent.
Right.
Where we are today in the calendar, does that make you more optimistic about the future of equities, or maybe more pessimistic or agnostic?
Yeah, no, I would say from a behavioral finance standpoint, I think you can take what we're going through today and easily make the case that it's cookie cutter of the 70s and of the 30s. And when those markets went up a lot, they did so in inflation. They did so in deflation, recession, depression, all kinds of different circumstances. And you can imagine what the headlines in the newspapers were like those days. And we have the very similar circumstance today. I mean, we cannot possibly imagine why the market's going up today, because it doesn't make any sense from an economic standpoint. And I think it's interesting when you look at in 1982 when the market broke above 1,000 for the last time. The most famous magazine cover is The Death of Equities, but to me the most meaningful one was actually in 1982 when we broke out above 1,000. It was a Newsweek, it might have been Time magazine, and it was a picture of a bull trying to get up off the ground, and he was kind of tethered to the ground. And the caption was, "Stock market ole, the economy A." Like the market's breaking out to all-time highs, and it makes no sense whatsoever. And I think that to me is fodder for a bull market.
You find yourself Wellington, obviously a well-known fundamental shop, so you interact with fundamental analysts all the time. What advice would you have for other technicians who, in the course of the business, it's just our nature that we interact with the fundamental side, and sometimes in a credible nature, sometimes not. What advice do you have for the technicians out there?
I would say that you can't be all things to all people, and so for me, the greatest success that I've had with sort of syncing with other styles and other PMs that do things differently is to find those folks that are technical friendly, and that you always get the best bang for your buck because it's something that they're willing to take action on. And it's I remember in days gone by where I used to go into a value manager's shop with an idea, and he'd be all excited about it. I'm like, oh, that's great, and he's like, well, I'm selling it, so somebody will buy it from me. So you can't be all things to all people. You have to know where your wheelhouse is, and find people that match with you, and then just provide idea generation to that crowd that really cares about what you do.
Has just a little different track here. Has the policies that we've seen, and I know you're a big historian, have the policies that we've seen that have influenced the market, do you find them similar or very unique in today's world versus what we've seen over the last
I find
years?
them cookie cutter.
Yeah. Explain that a little bit.
Just, we had QE in the Depression. We had a very similar effort from the government to stem deflation, and it's just this pendulum swinging back and forth. And as much as we like to think that we're experiencing a unique time in history, to a certain extent that's true, but to a large extent it's not. And I just think that history repeats itself, and we're just kind of going through that. And I think we have a pretty good roadmap as to what we can expect going forward. And as we said, Frank had indicated earlier that these thoughts don't actually enter into the discussion in terms of how we manage the portfolio. So we could easily, like when the market broke out, when you had the death of equities in I think it was 78, it was still a pretty good decline. Right. Following that. So you can't be blind to the risks of a 20% decline, and if it's within our skill set to manage that, we should. But just broadly speaking, I just think that the stage is set for the next ongoing cyclical bull market. I think we're in it already.
Great. Dave, thank you very much.
My pleasure, Jeff. Thanks for your participation today.